Good morning, the day after Black Monday. It is Tuesday, August 6th, and we say, what up? What? Today, I'm wearing a brown shirt, what brown can do for you. Not endorsing UPS. It is a soccer shirt, so FC series for all those that are looking at the video. But thank you to MLS folks, Grace, specifically for getting me this shirt. I really appreciate it. She drove it to my hotel after dinner because I had gone to bed because I'm old. First off, quite a few people took advantage of the Trendspider sale. Please remember to email me. So take a screenshot of your thing. How do you sign up for Trendspider? We'll go over it. It's the 4-hour algorithm. It's the 65-minute algorithm. It's trading bots. It's automated analysis. It's everything that you need in a charting program and more using ChatGPT, my custom watch list, custom scanners, everything that you see me do here, you can do. And I don't even touch half the stuff. But Trendspider, you go over here, you sign up. Then when you get here, it's a limited time offer. It's 15 more hours. So just today, you're saving up to 50%. Okay, $54 a month for this middle tier. That's the one you want because you get 100 simultaneous alerts. If you were down yesterday, remember the Qs on Trendspider, the 4-hour algorithm, it had you out. Would I have bought this one on a Friday, August 1st? No, I wouldn't have bought this one. It's on the downside of the 9-day. The 9 days moving down. Your 50 days starting to move down. I wouldn't have bought this one. I didn't buy this one. Did I sell up here for 13%? Probably could have done better. But the algorithm takes emotions out of it. So if you're worried about yesterday, the algorithm's perfect for you. Take advantage of this sale. Again, go to Linktree, linktr.ee/daily stock pick. And you can get this. The link is down below. And you get to this pricing page, sign up, you take a screenshot of your account, and then you go back to Linktree. And my email address is right here. And I will email you everything that you need to import to get started at Trendspider. It's the one thing that I will tell you that I absolutely can't trade without. Now, if you got hit yesterday, if you had alpha picks, you probably didn't get hit as bad as most of the rest of us. But if you had alpha picks, here it is, $50 off. So go to my Linktree, and it's the third one. It's alpha picks. They're killing it. 132% versus 46%. And what they send out yesterday, they sent out this email, okay? There's a couple of things that this particular portfolio is really good at. Great earnings pops. You saw it with Powell, MOD, and SFM. Nearly half of the portfolio pays dividends, giving you consistency. That's what they gave you yesterday. 5 of the 38 names in the portfolio have given you over 100% return. It's still beating the S&P by a large margin. What I love about this is that they tell you that you get 2 picks. You get one on the 1st, you get one on the 15th of each month. They tell you when to sell. Doesn't matter if it's the 3rd, 4th, 5th, whatever. They tell you when to sell. And that's the key, is it's a managed portfolio for you. And you can save $50 off of the yearly subscription. When you do that, you get access to the entire portfolio, all of the analysis when the portfolio was picked, and everything that you need in Alpha Picks. So it's the third line right there. Now, say you don't want it. I'll post this too in the newsletter. The newsletter is, by the way, 100% free. 100% free during the week. I posted yesterday, market crash, why and when will it end? Am I selling or buying? I went over everything yesterday. This newsletter is free. On the weekend, it is paid. It's just a way to support me, but I give you additional insights on the weekend. But say you don't want alpha picks. You want to do your own picking. Well, I'll post it in the newsletter, okay? You can sign up for Seeking Alpha Premium, and you can basically get all of the quant. We'll go over the quant, so stay tuned. I'm going to go over everything that we have today. Today, there's a lot in the green, and yesterday posed a lot of buying opportunities. And so we're going to go over that today with some key levels, but I want to look at the Qs first. The Qs first. You can see, I said it last week, that 450 was support. When we broke down below that, look out below, because I don't know where support is. Right now, I would say that 420, 426, 420 is probably your support. Your 50 days moving down, okay? Your 200 days still moving positive. We'll go over this because everything that I see in the market says we're still in a bull market. We're in a bull market until we're not. And so what are we doing now? Well, we're resetting. So you see this. I went over it in the paid newsletter. Last year, we saw over 3 times between the months of July and October. You saw 8% moves down, and it's a stair step. And so when you see these stair steps, look at this monthly from July. It doesn't look bad here, but if you look at the 4-hour, we saw 3 different times during this time where you saw 8%. What were we down yesterday? About 4%, somewhere in that neighborhood. But you're at all-time highs. Now, my expectation, and this is just, again, anything that you hear from anybody is an educated guess. Nobody knows what this market is going to do. If somebody has some type of time machine, sure, they can tell you exactly what it's going to do, but nobody knows what the market's going to do. Nobody knows the catalysts that are going to come to the market. Is Iran going to retaliate against Israel? What's going to happen? Who knows? Who knows? Is the Middle East going to blow up? Are oil prices going to go crazy? Who knows? Nobody knows. But what I can tell you is there's educated guesses out there. And my educated guess personally is that we're seeing a high. Okay, this all-time high set in the middle of June at 501 on the Qs. You're not going to see that again this year. I don't think so. Doesn't mean I'm selling, but I think you're going to see us bounce around. I think you'll see the highs be reached next year. And why next year? I think you're in an election cycle. I think the Fed is too late to move on this stuff. I think a Fed cut, be careful what you wish for. Guy Adami put it really well, and we'll look at that. Be careful what you wish for. And I think that unwind trade, if you didn't know the unwind trade in Japan, just an overview of it. What it is Japan has had 0 and negative rates for a long, long time. They're raising the rate. What's happening is the rate is becoming positive. It has been an arbitrage situation where people have borrowed money from Japan, at like 1 and 2% interest rates, and then just put it into treasury bills over here for 4 and 5%. And that's you can make an easy amount of money that is risk-free because your loan is 1 and 2%. Well, what happens when they start raising rates in Japan? Well, that starts to unwind, and people start to get out of that and start to pay off and start to sell their treasury bills because you can't make money that way anymore. There's a large amount of money that was doing that. What does that do? That puts pressure on the bonds because as they're selling them, the bond rates actually come down. So essentially, that's the quote-unquote unwind trade as far as I understand it. Do you need to go into more depth? If you feel like you do, just Google Japan unwind trade, and you'll find more about it. But here's the Qs, and we're just at the 50-day. I would say that on the weekly, that provides you a good support, but your MACD is still high. Your RSI is at 44. That RSI probably wants to come down like it did here in 2022 to the 38 and 40 level, which means we probably have more downside. Right now, you're expected up about 0.5%. There's plenty of green on the screen, and if you're a stock picker, there's plenty of opportunities out there, plenty of catalysts today. The trade yesterday was probably to buy TQQQ at the end of the day and then to sell it at some point in time here in the first hour or so of trading, because I think we'll settle in and I think you're going to see a little bit of a green day. But I think the rest of the week, I think we have some problems. And that's just it. Doesn't mean that it's bad. Just means that we're extended. And I posted in the newsletter yesterday, I posted this, okay? I said, here's the current levels. And I saw Bob Pisani go over this. And this is fundamental analysis, okay? This isn't technical. This is fundamental. This is just the price and earnings growth. So the current level of expectation is that earnings growth will grow 15%. That's the current expectation. Okay? If we go down from there, then the S&P level needs to come down. The current PE of the S&P is 19. That's traditionally high. Traditionally high. But between 15% growth and 19 PE, that gets SPY to 530, 5,300 on the S&P level. Okay? We'll go over and we'll look at SPY in a little bit. But that gets us to 5,300. Now, we're way off that right now, and it's in a downward trajectory. So let's just take the growth down to 10%. And let's say the PE is 19. PE stays at 19. It's elevated because we're growing, and it's a good economy. So your 10% growth and a 19 PE, that takes us down to 5,089. That's 508 on SPY. Okay? Let's take a little bit more of a bearish look. And say we're going into a recession. Well, the PE of the S&P has to come down to 17. say we still keep 10% growth. Even though we're in a recession, we still keep 10% growth. That would bring the S&P down to 455. 455. That's a big move. Now, the ultimate bear would be we're not in growth anymore. It's only a 5% growth. Earnings are only growing by 5%, and the PE goes down to 15. That brings us to 383. So let's go look at SPY, and let's look at it in the 4-hour algorithm and see where we're at. And then we'll go and we'll look at a weekly, because those levels that I put are on a weekly. I didn't put that 3,000 mark in there, unless I did. Let me see. I don't know if I did. I did. So here's SPY. We're on the downside of the 200-day on the 4-hour. Okay, you can see those levels that this 479 is just the previous level. That is the 2022 all-time highs. We've passed that. And the crazy part is, from the October lows to the highs, 66% in 2 years. 66% on SPY in 2 years. That's too much. That's too hot. So you've got a lot of downside with the ability to go down. Doesn't mean you will, but it just means the ability to go down is there. It could crash. That 479, that's a realistic number. Because again, we went over these numbers. Remember, 5,000, 4,500, and 3,800. That's what you're looking at. So it does have, don't let somebody talk you out of trading, because you don't want to get into these bear mindsets, because ultimately the stock market is bullish. Because look at that MACD. It is super low. Look at the RSI. You're at 28. It's got to, buyers will show up. They will show up. In a bull market, they will show up. Take a look at the weekly. We're not even close to that 50-day. That 50-day is at 492. Now, the previous all-time highs, 479. So you're only $7 within that. The Bollinger Band is sitting there. If you get down to that 50-day, you're trading below the Bollinger Band. Now, remember, that middle bear thesis is 4,500. That brings us down here. So technicals with fundamentals will guide you to where you're at. Look at the MACD. The MACD is still elevated on SPY. The RSI is still at 47. It's in no man's land. So I don't want to scare you out of trades, but I just want to point out, I think we probably have a little bit more of downside. And that's it. Tom Lee yesterday discussed it. My claim to fame is that Tom Lee blocked me, so I can't see any of his stuff, but I just log into the incognito Twitter to see his stuff. He blocked me because he said my newsletter is in competition with him. Dude's on CNBC making millions of dollars. I ain't making millions of dollars, Tom Lee. I ain't no competition. He said this is going to be just a blip. He said it's going to be a rip-roaring rally back, but he doesn't know when. He said the unwind trade in Japan should settle things out this week, and then we see the upside. But he also said, that he feels that the IWM will rally 15% in August, and that was before this moved down. So I bought on his thing. Don't listen to a douche on the internet. Gene Munster. I like this. I really like this. I've been the person calling for a 3 to 5 year tech bull run, and now we're in the vortex of market chaos with the NASDAQ down 13% over the last month. Bottom line, chaos is the right word. Before today, the VIX is the key. We went over that yesterday. I won't go over it again. It pulled back to about 38. It's pulling back down again. But the VIX is the cause. The VIX is one of the biggest things that, hey, you could tell it was going to go crazy. But yesterday, intraday, as VIXy was the trade. The cause, central bank of the recent sell-off and 30% NASDAQ, blah, blah, blah. People are just scared. People are scared. And he goes over that. I'll put this in the newsletter if you want to read the whole thing. The other video that I think you should watch is Ed Yardeni here. Notwithstanding Friday's jobs number, I think the economy's fine. And I went over this yesterday. I think the economy's okay. I think we've gotten ahead of our skis, and there is more downside to come. But if the economy is fine and you're feeling that way, I think you've got more room to run. Are you getting back to all-time highs? No. I think you're going to take a little staircase up. So if you wanted to take some profits and do that, I don't think it's a bad time to do it. Rebalance your portfolio. Don't do it today. Do it over the next week or two, because I do think you want to see where the market goes. But Ed Yardeni kind of points it out. Now, this was a great post, and I will include this in the newsletter. These are 9 stocks, the cheapest valuation in years. Amazon is number 1. I went over this. CRM, Salesforce, software has been horrible. Nike, I don't buy Nike. I don't buy Nike stuff. But if you buy Nike stuff, go and buy it. Square, I own Square. I don't want to own Square. I don't like that one. Lululemon, I think their valuation is being reset. I think that one is a buy at some point in time. Evolution AB, I have no idea what that company does. Ulta Beauty, I'm not a beauty expert, but that valuation just makes sense to buy it at these levels. Doesn't mean that it's going to pop back up, but it does make sense to buy it at those levels. Wise, no idea what they do. Vail Resorts, it's real estate. Not kind of into that. That's more of a REIT. So again, do your research. Look at that. Guy Adami, this was great. And Guy Adami agrees. There's no emergency. The stock market can go down. Rate cuts are not some magic salve. A rate cut actually makes the yen carry trade worse. If the Fed had a set, they would start to think about hiking rates. Again, he is in the bear camp. He wants them to hike rates. He actually thinks that hiking rates and avoiding a recession is better than lowering rates and inviting in a recession. Again, nobody knows what the right call is. Jay Powell most likely will wait until September. So you're just kind of in this trade and you're in no man's land where you're going to hear a bunch of bears. And depending on the day and depending on who you're listening to, that's going to be what you're listening to. But understand, you've got to sort these things out in your mind and you've got to make your own thesis. My thesis is we're still in a bull market. We're still in a bull market. Dan Niles, who I wrote the newsletter about this weekend. With the economic continuing weekend, the sell-off in AI-related names following poor results and the unwind of the yen carry trade this morning, the VIX has an incredibly high 66. It's only hit that, by the way, 2 times. The financial crisis and COVID. That's it. One potential event I worry about leading to new lows is whether this unwind of the yen trade leads to some large, highly leveraged financial firm failing, much like Lehman. This is not my base case, given the sharp rally in bonds has reliquefied the long-term treasuries in the market. From a long-term perspective versus the next 24 hours, I do not believe we get a recession what the market seems to be discounting. There are still over 10% more job openings than people unemployed. Low unemployment at 4.3. The Fed was already expected to cut multiple times this year. I think you're fine. That's what he's saying. I think you're fine. I'm in that camp as well. I am 100% in that camp. I think you're perfectly fine. Now, let's get to some stories. Stock futures. Goldman says not the canary in the coal mine. Their desk is seeing perfectly constructive trading at their trading desk. That's it. I mean, that's what you want to hear. Now, do I think that says, oh my God, let's go all in and buy? No. I think you want to buy into strength. I think you want to buy some of these stocks that are on sale right now to rebalance your portfolio, because I do think the Magnificent Seven and the Great Eight, which includes Netflix, I think they're perfectly fine, and I think they just got a little bit of a discount. Now, Apple is obviously one of the biggest one. We can talk about the biggest movers of the day. Lucid. Don't chase Lucid. Lucid's just a trade. It is not an investment. Peter Rawlinson is a fantastic CEO. He got more money out of the Saudis. That's all that is. It extended their runway. Great cars. But I think that they're trying to get to the position that Tesla's in, which is trying to produce more vehicles. They produced 2,110 vehicles, delivering 2,394 in the quarter. That's not a lot. That's not a lot. That is a company that's losing money. Do not get sucked into that. Palantir is a different story. That one gained, it popped 20%. We'll go over that one in a little bit. That's a solid play. Anywhere, when it approaches 25, you buy it. When it approaches 30, you sell it. Until that range gets sorted out, that's the trade on that one. So now let's talk about Apple, because Apple is down in pre-market about 2%, 206, 207. I think the Google losing the antitrust case news from yesterday would have been the leading story had it not been for the day that we had. I mean, simple as that. This is a big story that Google lost the antitrust case. Now, what does it do? I think it presents Apple an opportunity. And I don't think that this is it's not a move the needle opportunity, but more likely what they're saying here, it doesn't affect the stock. but they could be in a position where they could create their own search engine. Remember, OpenAI created their own. Probably not that big of a stretch for Apple to create their own. Therefore, getting more revenue off the iPhone. Remember, Google does pay them. But where's the biggest moneymaker? Is it in the Google payment, or is it in Apple actually expanding into the OpenAI? They could also just let OpenAI on and have OpenAI pay them. So maybe they get more money out of this. But again, I don't think it has anything to do with Apple. I think Google losing the lawsuit, probably not a great thing. I mean, if you want to take a look at the two charts, like I said, Apple is down pretty big on this one. I would say, and to go back to the biggest story that a lot of people were asking about, what do you think of Warren Buffett selling Apple? A, it's still his largest position. B, I think he was unwinding that trade. It got too big. He raised cash. I think he was super, super smart in getting out during that time. And if he sold it up here at 220, 230, fantastic trade. If this thing gets below 200, that dude is buying. I'm telling you, that dude is buying. I don't know, maybe he doesn't see the benefit. Dan Nathanson was on yesterday, the biggest bear in the market. That dude has nothing good to say about any of these Mag 7 names, nothing. But he said he doesn't think Apple Intelligence is good. Well, when you got 2 billion freaking iPhones on the planet and you get Apple Intelligence in there and it sucks you into the ecosystem a little bit more, I think that's a pretty good thing. And you only can use it on Apple 15 and 16. That's an upgrade cycle. But again, that one's a good one. We can take a look at Google. I'd say anything under 160 on Google, you load up on it. Does it mean that you're going to make money in the short term? No. It just means that you're adding yourself a great position to your long-term portfolio. And if it's in a brokerage, you want to hold it for over a year. If it's in your IRA, you can trade around it. But right now, you're seeing the MACD is super, super high. What happened with the last time this MACD got up this high? Well, that was 2021. It slid down through 2022. I don't think that's what we're going into. Could we? Yes. If you're looking at that, then 150 would be your support level. You're only trading at 160. So if we're going back to that, you could go back to 130. But that valuation at 130, that's a good one. That's a good one. Now, talk about chips. Taiwan Semi, it's a strong buy in the Quant. The Quant rating has had this as a strong buy. Let's go see. Let's see what the Quant rating has said on Taiwan Semi. Since they went strong buy. I think they went to strong buy when it was like in the 120s or something. I don't know. They went to strong buy at 161. It's at 147. They've had strong buy since 136. It has been up and down. The valuation is the only thing, but it's a C. Now, I do think China plays into this stock price a lot. I think it trades into it a lot. You can see the growth. They're growing, 9.44% year over year? The sector's growing 3.64%. Profitability, they're killing it. 53% profit margin. The sector is 49%. Momentum, A+. Revisions, B+. 7 up, 1 down. 30 up on revenues, 1 down. But again, I think this one comes into play here. The story on this one, let's get back to the story. The story is that they're raising prices. Global Foundry ticks higher. They're raising prices on 5 nanometers and 3 nanometer nodes in 2025. That's good. When a company can raise their prices, they're going to make more money. That's good. And what, if you're investing in Nvidia, Apple, AMD, any of those chips, guess who makes them? It's Taiwan Semi. So again, if you're in those chips, take a look at Taiwan Semi. This was great. This is an hour and 13 minutes. Steve Kress, who's the head of the Quant strategy, VP of Quantitative Strategy, is Seeking Alpha. He's fantastic. I've got a video at the end of my YouTube videos. I linked to it, but it's on my channel. And we go over for an hour Alpha Picks. Again, Alpha P's the man behind the Alpha Picks theory, but marketing opportunity in today's uncertain market. And it gives you a bunch of little stuff, 3 or 4, I think, picks of his. It's great. And I like this. This was just yesterday that they posted this. Shares this insightful macroeconomic data points, food for thought. I liked it. Now let's talk about earnings. because there's a bunch of earnings going on. We're still in earnings. Here, Palantir with AI. I think the biggest thing they beat and raised. It was up 20%. It's up 13% right now. Like I said yesterday, I expected a huge move in this stock. 25 is the support level. It got down to 21 yesterday. 21 when 25 was the support. I said if they posted a good quarter, you would see this pop back over that support level. It did. The biggest thing in this one, I think the one to really push this to over $30 per share, even though the valuation makes no sense. Make no mistake, the valuation on this makes no sense. But their corporate business grew by 30%. That's huge. So they're expanding out from the government business into the corporate business. I like this one. I like it a lot, but the valuation makes no sense. None. You've got a PE of 75. Okay? Continue to trade this around that support level of 25. When it goes below 25, buy it. When it goes above 25, sell it. Sell it for your profit. Take profits on this one because that valuation is the biggest issue that you've got. Your growth, enormous. 17% revenue growth year over year. It is a one-stop shop for AI. What this told me is that the AI software trade is still on. AI software trade is still on. Yeah. So I like Palantir. We can go and look at the chart. It's in the core portfolio. If you remember, I took out CrowdStrike when it was like $100. Snowflake is what I took out. I took out Snowflake when it was like $200. And I said Snowflake's a trade, but I think Palantir's a good long-term one, and it's going to outperform. Well, look at the candle. We had that nice little gap down. It filled the gap. It just passed by the gap. Expect that gap at 25 to be filled again. Expect it to be filled again, but the MACD, super low. RSI, it was overbought. This one was clear and present that it was going to do that. If we go back and we look at the weekly on this one, you can see it doesn't have a 200-day yet. We're just playing with the 50-day, and you're using the 50-day as support right there at 21. So again, when it gets over 25, I would look to sell it and look to buy it again under 25. I think that's the trade for you on Palantir. Uber killed it. They're up 7% in pre-market. They killed it. Now, I know I've said Uber is like a $70, $80 stock. We can go and look at it. They killed it. Lyft is up on this news. They are reporting tomorrow. They will probably kill it as well. But Uber stock, you can see on the 4-hour algorithm, it's been sliding. Okay? It's now up, but it's red on this candle. It opened at 62.55. It's trading at 62.50. I think we're going to see some weakness in this one. I think you're going to see it come back and fill this gap down to 60. At some point in time, that's what it's going to do. Your 50 days moving down, your 200 days moving down. Do you want to get out of this one? I'd probably get out of it at some point in time if you get up to like 65. I'm in at 40. I'll buy again. I think that 61 provided you support level. It broke down from support. So at 62.56, probably a good time to sell it. Again, the 50 days moving negative. We're not seeing a strengthening consumer, but they announced killer earnings. Killer earnings, gross bookings, top estimates. Is the consumer weak? I don't know. They're still traveling. KVUE beat, Planet Fitness beat, and Cat beat, Celsius beat, CELH. This one beat. Now, the news is on this one, you'll see the headline is that Celsius pops on earnings. It's up 2%. And I want to show you this. I'm not going to put this in the newsletter, but it's up 2%. Soars after international sales. Amazon channel helped power earnings. I saw this headline. I'm like, let me see. It's got to be up 10, 15%. It's up freaking 2%. Now, we go and we look at this chart, and it's not soaring. Somebody's talking their own book. This isn't an alpha pick, so I don't know who's talking their own book, but the author is talking their own book. Let me get rid of this one. Penny, I love you, but stop. Celsius. It's not soaring. That's a broken stock. The 50-day still moving negative. The 200-day moving negative. Your RSI is in oversold territory and it can't come up. It's the valuation on this one that's killing it. But I saw that headline and I said, wow, it's got to be soaring. No, it's not. And the Quant got you out at 57. You're trading at 42. The Quant got you out. The Quant is good. Again, the Quant is something that you want to pay attention to. When it moves to sell, get the hell out. I mean, again, get the hell out. The move between hold and buy, you can probably, if you want to hold it, hold is kind of like a sell. It's not a great one, but typically, good stocks will move in and out of that. You talk about a good stock, MPLX. This one, crazy good dividend, almost 9%. They killed it. They're up 2.38%. I wouldn't say it's soaring. It's up more than Celsius. They're not soaring. I mean, MPLX, it's a energy company, up 2.82%. You could get this under 40. That was a great buy yesterday morning. Another great buy. At the low was $40.15. A great buy. Look at how low that MACD is. The MACD hasn't, the algorithm hasn't gotten you back in. This isn't one you trade. This is one you just buy and hold. A 9% dividend. Okay, look at MPL. This is the core portfolio. It's the beauty of the core portfolio. There's a mix of stocks. Some do some are super volatile. Some aren't that volatile. But MPLX, 9% dividend. It's a great stock, and they killed it. CrowdStrike. I don't have a story on this one, but Piper Sandler upgraded them. They said that they think that the downside is done. There could be some lower, but they think the largest move down is over. They lowered their price target to $290. So those of us that bought at $300, we're probably effed. I mean, bend over, take it. But they think that here at $223, they think the price could move to $290. So they think it's a good one to actually buy. It's mostly they think it's over. I think that's what I have here. So let's talk about one of the earnings tonight, because I know a lot of you are probably in this one. SMCI reports after the bell tonight. Now, this one was up 3%. We're seeing a move down on some of these. NVIDIA is up still 2%. SMCI's moved down. I don't know why. I don't know if there's news in the market, but there's selling pressure on this. And they're reporting after the bell. We'll take a look at this one. This is an ugly chart. Full disclosure, it's an ugly chart. I know I said, hey, we're trading sideways like we did last year during this time. We didn't see this move down under the 9-day last time. This time last year, we didn't see that move under the 9-day where the 9 crossed the 21 and it crossed under the 50. We didn't see that last year. I'm nervous. The MACD is resetting itself. The RSI is down at 41. This is still, look at that big move in volume. And that's what pushed the stock price up. We're not seeing that move. The earnings tonight are critical for this one. If you take a look at SMCI here, and we go and we look at the Quant still says strong buy, by the way. And it's not, I don't think it's heavily covered. We can go and see 3 up. Yeah, 3 up, 1 down, 4 up, 1 down. It's still a strong buy in the Quant. I think it moved there. It's a buy. The valuation is tough. The profitability is where it's at. Did they actually have to move their margins down in order to keep growing at the rate that they were? Dell wasn't in this business. Dell wasn't killing it. The problem was SMCI had almost all of the NVIDIA market, and then Dell moved in. And then HPQ moved in. And those guys are big companies. SMCI was not a big company. It still isn't a big company. It's $35 billion market cap. And that's, $35 billion. This was less than a $1 billion market cap when this move started. So, the valuation, a little bit extended. Not crazy, because again, if they keep up this growth, they're only at 0.53 if they continue doing it. If we go to Earnings Hub, this is where I kind of get nervous when I look at the expectation versus the last reported. And if we just take a look at this, we go to Earnings Hub, we click on SMCI, and it's after the bell today. $8.10 estimate. Okay, reported $6.65 last time. $5.29 billion in revenue, 3.85%. Okay. They killed it last time by beating 13%, but the revenue missed. What did the stock do the last time that this one reported? Look, it just moved sideways, and they killed it. So this one, high expectations. MACD kind of resetting itself. RSI 41. It could move, but I want you to be prepared. We'll go over this. Somebody asked me about GCT and the social request. This shouldn't be 90% of your portfolio. This shouldn't be 50% of your portfolio. This shouldn't be 5% of your portfolio. This should be 1 or 2% of your total portfolio. If it's anything larger, you're risking it. Because at these all-time highs and this type of move for a company this size, it should not be that large in your portfolio. That's just the way that it is. Understand size, timing, and all of that plays into the portfolio management. As this one moved up, you could have been selling it. I was buying at $1,000. I'll probably regret that for a very long time. I can't imagine that it gets back up there, but they could kill it. But I like this one after the bell. I do. I like this one after the bell. Some of the other big ones, we got Shopify tomorrow. Shopify's up 1.3% today. I don't like this chart. I know I said, hey, it's an $80 stock if you hold it. I don't like this chart. I just don't. That 200 days moving negative, the 50 days moving negative, we've just got problems. Now they report tomorrow. I am going to wait for earnings. I'm not buying this before earnings. I am sitting here waiting. If they announce that the consumer's weak, this one's probably down towards 45 again. The actual valuation of this one doesn't make sense. Right now, with the growth that they have, the valuation doesn't make sense. You can see the PE's at 56. I mean, that's huge. The PEG at 1.24. That's not horrible. That's really, really good. But the revisions from the street, 14 up, 24 down, 17 up, 24 down on revenue. That's a hard one. When you go over to Earnings Hub and we look at Shopify, when we pull this up, what's their expectations? Is it up? Is it down? 20 cents estimate. That's what they reported last time. 1.86 billion in reported revenue. They're expected 2.01. So they're expected to grow during a time when we're told that the consumer's weak. That might be hard. Disney tomorrow. One that I really like, honest to God, is Eli Lilly. Eli Lilly has pulled back. And again, their Ozempic stuff, they're probably going to raise the guide and guide higher. This I like. This one, we can look at they're going to expect it to go bigger. But Eli Lilly on Thursday, I really like this one. The algorithm has you out, got you out with. I wouldn't have bought this one. I would have said, hey, we're on the upper end of the 9-day, but everything's moving negative. Do I expect it to bounce off that 200-day at 812? Probably, but 787. If you had told me, I think I said just buy it under 900 the other time. Let's go and look at Eli Lilly. I like this one. Eli Lilly, in my mind, is a great, 9 up, 10 down, 12 up, 6 down. But that's off of like record revenues. We can go and look at the valuation, still extended. But they're getting Ozempic approved for other factors. Now, when you look at the forward PEG, it's 1.39. That's below what the sector's trading at 1.83. The Quant has it as a hold. It's 50 out of 193 in healthcare pharmaceuticals. What's number one in pharmaceuticals? Probably a company I don't even know about. Yeah, Fulcrum Therapeutics. I don't know the top 10 in this at all. Jazz I've traded before, but I don't know what they do. I don't know what any of these do. I'm not a great pharmaceutical stock. I like this pullback. I like this reset in this company because honest to God, I think that 50-day probably provides you support at about 700. So you've got a 10% down, but I do think you've got at least a 10% upside. I think this one, the MACD, again, on the weekly, it needs to reset itself. So I think if you see this on Thursday, I think if you see this pull back further, I think it's an opportunity to buy. I think if you get this one anywhere near $700, I think you just pull the trigger. Vistra Energy. This is one that is a Texas company. VST is the thing. I think I'm in VRT, Vertiv. But Vistra Energy, this one's pulled back as well. And this is a Dallas energy company where they've got a bunch of data centers and stuff like that. Their earnings are coming up. That's on Thursday. This one might be an interesting play. Now, it's a little bit expensive. We can go and look at this one. From a quant standpoint, I think it's, no, I don't want voice assist. God, look at that stock. Ugh, horrible. It's a penny stock. Vistra, it's a hold in the quant, and it's the valuation. Now, could it come down? Yes. Could they announce growth? Yes. But, PE going forward, 13. Sector at 16. The PEG ratio, they don't have the growth in there. We can look at the growth. It's not heavily covered. But the growth, their revenue year over year down 10%. It's an interesting one. This might not be a great one. Vistra, VST. Let's look at VST. I like this one, though, to trade around earnings. Because when you look at the stock chart, look at the last earnings. It hit at 82 and ran all the way up to 99. Now, you've got the death cross. But I do like this one. VST. No, I don't want VS. God, I hate when my computer does this. VST. There we go. VST, Vistra. They're expected 98 cents. They reported 55 cents a loss last time. 3.38 billion, $3 billion last time. Might be an interesting one to play. But I think if they pull back, I think that's one that you could do as well. So there's a bunch of others. I'll put a graphic in the thing. Let's see. Let's look at AJ from Substack. Google, Amazon, Microsoft 3-year trend charting is August through October, seasonally low pullbacks. Wondering if these three, given respectable earnings, Amazon grew year over year, trend lower, presented Buffett value buys in the near term. If these are ever Buffett valid buys. And look, Apple's down 3% today. Apple is down 3%. The Qs are up. Let's see. Are the Qs still up? No, the Qs are even. Like I said, it's going to be hard for some of this to stay high. But Apple is at 201. If you get under $200, buy Apple. I mean, it just makes sense. Is that a good one? Probably. Amazon is down 1.4%. Now, do you want to buy this into weakness? No. You want to buy into strength. Wait for this stuff. Seasonally, yes, it's just a bad time to buy. We can take a look at the seasonal of Amazon. If we go back 8 years, let's just go back to, let's go back to 2000. Because Amazon had several 40% losses over months, during the 2000 dot bomb. But when you look at August, 56% of the time. When you look at September, 50% of the time. Now, when you get to November, 75% win. So I'd say you buy during any of these 3 months when you get some strength and then sell into November's rally. That's what I would say. This is Black Friday. That's what this is. When Amazon comes out, you looked at Amazon in July when Prime Day was going on. That's what it did. Look. That's where it went from 188 to 200, and then Jeff Bezos started selling. That's it. I said about Amazon, Microsoft, buy it under 200, under 400. It's at 400 right now. I think that's a value buy for a long-term potential. I do think if you have a long-term eye on these names, I think these are fine buys. Now, are you getting back to this, for $440, $460 this year? I don't think so. But I think, at $400, you've got to have a longer time frame. I think at $200 on Apple, you got to have a longer time frame. If that iPhone cycle does come in, look, Buffett sold Apple throughout this quarter. Okay? Buffett was selling billions of dollars throughout this quarter. He didn't just start on July 16th. There's no way that guy started selling on July 16th. The market took this down on July 16th. He was selling through this uptrend. And then he probably stopped selling or maybe continued selling through this downtrend. But he got rid of half of his position. And the stock started the quarter at 200. It started the quarter at about 212. 206, somewhere where it is today. So you've just made a quarter where you haven't made any money. That's it. Felt good for a while. Haven't made any money. It's hard. $200 is the support level for that one. Google, on the other hand, you've got some issues with OpenAI starting their own search engine. If their bread and butter is gone, then this one I think comes down to 150. But I do think that one's a buy. And Microsoft, I said in my note to AJ, short answer is I think these three are fantastic buys even now. Long answer, I probably would look to the key SPY levels I posted today, which we went over at the beginning, with a pullback from 19 to 17, knowing that type of pullback The main pullback in the S&P will be these three names, Google, Amazon, and Microsoft. It will be Apple. It will be the Mag 7. Those PEs need to come down. Okay, we've already had their earnings. So the PE on those you want to see them come down. And you can track that on Seeking Alpha. You can go and do a chart. I don't think any of these pullback go to under PE of 17. These names will not go to a PE of 17. They make too much cash. They are too big. They are too massive in their cash flows. It won't go to 17. You will always continue to have a 20 plus PE on these names. Just buy, if it does go to 17, you can buy a ton of this. Google may be the only one of the three where there's some competition in the search business, but I still hold this company long as I think they can weather the storm and will monetize it. I went over my Google experience with AI yesterday. I love the question. Tone from email. What's your thoughts on GCT? It's 2% of my retirement account. First off, I would say that is too big of a percentage to have in your retirement account. It's too big of a position for a company like this. And why is that? Well, GCT is a name that's run up, but it's also a very, very small cap name. I don't like small caps. And when you look at GCT, yes, the valuation is fine. There is some concern about the short selling in this one, and the short selling has brought it down. Now we can look at it. It's still a strong buy in the Seeking Alpha Quant. It has been a strong buy since it hit 40. I think it was close to 40. I think I may have bought at 35 or something. But this has been a strong buy since it was 13. And so this normalization here, I would say the support level is 25. We can go and look at this. I would say if you get below that 25 like we did yesterday and hold there, then we're looking at probably 18. So I don't know, in your retirement account, I think it's too much. I think you sell a position of this. Their earnings are coming up today after the bell. Yep, today after the bell. Now we can go over here and we can go to Earnings Hub and see what they're expected. I haven't looked at this. Let's see. GCT. GCT. So they reported 66 cents. They're expected 71 cents. They reported 251 million. They're expected 276 million. It's a small company. I mean, again, those moves are big for a small company. And the stock will rise based if they beat it. But you're going to see a short seller report come out and say they're faking it again. It's a small company. It's a $1 billion market cap. That is not a big company. And it's coming off those years where it was trading at 9 and it's now at 24. That's a $500 million market cap company. So a gig cloud stock, consider buying the dip. Even with lower price margins and sales and margin, it's still a good deal. Don't look at the headline growth numbers, capitalizing on network trends. There's a lot of analysis on Seeking Alpha about this one because A, it's an alpha pick, recent alpha pick. I don't know if I'm supposed to say that, but it is a recent alpha pick. And it's gotten a lot of attention because it has some volatility. It's on the downside. When we look at the chart, it doesn't look good. You're trading under the 200-day, which is moving negative. The 50-day is moving negative. You had this death cross right here where the stock was trading at 30. And that was a sign, hey, maybe you want to look at getting out. I thought it was an opportunity to get in here at 29. I thought it was going to come back up. It rejected off that 200-day. And so the 200-day has moved negative. Now, I will say that 25 tells me to sell. If this were 2% of my overall portfolio, I'd probably get the hell out of it. I'd probably get, honestly, I wouldn't get out of it totally. I'd cut 50% of it. Put 50% back into NVIDIA, into SMCI. Into, Roblox under 40, into, maybe Uber, and probably not Uber, but, VOO, just buy something safe, something that Exxon, Energy, you know what you can buy? Oxy, okay? Oxy's at 56. Oxy has just trailed down. If you think that Warren Buffett isn't getting ready to spend some cash maybe on Occidental Petroleum, he's bought a bunch of it. He may buy more. I mean, if you go over here and you look at his buys, they're all in the high 50s. And the thing still hasn't been able. If you're selling Apple because Warren Buffett sold Apple, why are you not buying Oxy because he bought it? Look at this. Through October of last year through June, he was buying in the high 50s, even the 60s. That's a lot of money. Look at the shares. Look at the dollar amounts. He's buying a lot of Occidental Petroleum. A lot of it. Now, there's, not that great of the average price target, 72. It's trading at 56. So I would say get out of GCT, get half of it out, maybe put some into Oxy or even MPLX. Now, scans on this one, I'm going to go over them, but there's only 2. And it's because yesterday was such a bad day, and today we're even seeing some weakness as the market opens. But Realty Income Corp, I hate this one, but it's been on a run, 52 to 59. Look at yesterday's action; it didn't come down. Yesterday's action was really good in this name. And we've got the MACD crossing up. The algorithm says, not only was this $52 a buy, it might be going for a second run. Now, when you look at the weekly, the reason is it is a decimated stock. You could probably get up to this the 200-day at 62. Is real estate turning around or REITs probably a good investment? I don't know. I don't know enough about the space. One that I do know that's probably not worth this, but it's any reaction in the market is an overreaction, and you might be able to make some money on this trade, is Dexcom. Okay? Dexcom has an enormous gap that it's starting to fill. I don't know that it's going to fill the whole one, but at 74.53, this one's up 5% today. Could you cover this gap to 89? Potentially. You're in the middle of it. The 9 days starting to turn around. The 50 days still moving negative. Your 200 days still moving negative. Expect those, but your MACD reset itself and it's way down. And your RSI is down here at 37. Is it an opportunity? I think so. Again, the CEO blamed the reorganization of a sales team on this. That seems crazy to me, but 106 is the gap. I don't think you get back up there, but you could. So those 2 are your scans. Again, remember, Linktree is where everything is at. Your Trendspider sale is going on. You got Seeking Alpha Premium if you want to look at the quant stuff. And you've got Alpha Picks. Join Webull. I just got a reward, so thank you for anybody that joined on that one. And the newsletter's free. Go and get the newsletter. It's free during the week. And I'll post the newsletter again today. So, okay, that's it. About an hour long, 51 minutes. I will talk to you tomorrow. Hopefully we end the day green. Okay, see you. Bye.
The trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.